Hello and good morning, everyone. Welcome to another week and welcome to the Market Snapshot series by FX Pesa. So today we'll be talking about a couple of things. We'll be talking about the earnings that you're expecting to see in the markets this week. That is Meta, Apple, and other companies. We'll also be talking about the interest rate decisions by three central banks. One is the Bank of Canada, the European Central Bank, and the Federal Reserve Bank of the US. And once we cover these, we'll do some technical analysis, try and understand the prevailing market patterns before we go ahead and look at various market opportunities. So once you join in, kindly say hi on the live comment section, and these will confirm that everything is working just fine. So good morning, Humphrey, and thank you for joining. So as always, remember that this session does not constitute any investment advice. It's not a recommendation to trade. So you should always do your own due diligence. So good morning, Dennis, and thank you for joining. So let's begin with the economic calendar. And as you can see, on Monday, we don't have much happening. We had manufacturing PMI as well as the non-manufacturing PMI data coming in from China, where in both cases we saw a slowdown. Manufacturing slowed down 49.1. This was a big shift from 50.1, which represented expansion. Remember that values in PMIs above 50.0 are considered to be expansionary and below are contractionary. So it basically shows that manufacturing is entering contraction territory within China. Then for non-manufacturing PMI, or basically services PMI, we are seeing a slowdown from 52.2 down to 50.2. So these might be correlated with what's happening in China. Of course, they're just entering into a sequence of holidays. In this case, the Spring Festival ahead of the Chinese New Year celebrations. So we could be seeing a slowdown in manufacturing and services as China looks to go on a longer holiday. So for the rest of the day, we'll be having a speech by ECB President Lagarde that just started at 11:10 a.m. Then German IFO Business Climate Survey at 12 p.m. And then we'll be getting new home sales data at 6 p.m. affecting the US. Then right past midnight, we'll get a speech from Swiss National Bank Chairman Schlegel. That is very early on Tuesday. Later on, we'll have core CPI from the Bank of Japan, which is expected at around 1.7%. Core durable goods orders and durable goods orders will be the main thing tomorrow at 4:30 p.m. for US dollar pairs, as well as the Case-Shiller Composite 20 House Price Index. So we'll also be getting the conference board. Apologies for that. We'll also be getting the conference board consumer confidence survey. That will be at 6 p.m. on Tuesday. Then the monetary policy meeting minutes from the Bank of Japan at 2:50 a.m. very early on Wednesday. So the week will get pretty interesting from Wednesday, where we get the CPI from Australia. So of course, we expect a slight uptick of inflation to around 2.5%, up from the previous reading of 2.3%. Then we start focusing on the Bank of England, which is expected to cut interest rates. Sorry, not Bank of England, but Bank of Canada, which is expected to cut interest rates from 3.25% down to 3.0%. Then for the Fed, we expect the Fed to hold rates at the current level of 4.5%. Of course, that will be happening on the same day. So Bank of Canada and Federal Reserve Bank of the US will be making the decisions at 5:45 p.m. as well as 10 p.m. on Wednesday. And of course, we'll be having a speech from Bank of England Governor Bailey on the same day at 5:15 p.m. So fast forward to Thursday, we look at the ECB. So a potential 25 basis points rate cut from 3.15% to 2.9% is also expected at 4:15 p.m. On Thursday, the 30th of January. Then advanced GDP for the US, unemployment claims data will be coming at 4:30 p.m. Then the European Central Bank press conference. This will be at 4:45 p.m. Then Tokyo core CPI very early on Friday, before we focus on the German preliminary CPI. Switzerland retail sales will also be expected on Friday. Then Canadian GDP or economic growth rate expected at 4:30 p.m. We will get the core PCE price index, which is a very strong measure of inflation that the Fed focuses on. So this will also be a big market mover on 4:30 p.m. on Friday. And of course, the employment cost index at 4:30 p.m. So outside the economic calendar, we also be having earnings this week. So some of the noteworthy earnings include companies such as Lockheed Martin. So it will be quite a busy week. So today, being Monday, we're expecting to see AT&T earnings, Bank of Hawaii, Hope Bancorp, and Sophie Technologies. So nothing major. Then also towards the end, the close of the market, we'll be getting more companies reporting, including the Western Alliance Bancorp. So Tuesday is when the earnings calendar gets a bit busy, with Lockheed Martin reporting earnings before the market open. So then we look at other companies reporting on the same day, including Boeing, General Motors, Invesco, and so on. Then towards the end of the trading session, that is at market close, we get even more companies reporting. So Wednesday, we have Applied Industrial Technologies, ASML, ADP or Automatic Data Processing, all reporting on Wednesday. And of course, our focus will be on key highlight stocks such as MSCI. We'll be looking at Meta Platforms, which will be announcing its fourth quarter results after Wednesday's close. Analysts expect social media giant to report earnings of $6.73 per share, which is up 26.3% year over year on a revenue of $47 billion, which is also up 17% year over year. So Meta has set itself apart among tech giants by turning AI or artificial intelligence investments into quick wins, says Matt Britzman, senior equity analyst at Hargreaves Lansdowne. So unlike cloud providers that sell AI capabilities, Meta focuses its efforts on enhancing its own products, driving higher ad revenue. So other noteworthy earnings include Agnicol Eagle Mines, Ameriprise Financial, Bosch, Benchmark Electronics, among others. But our main focus for today will be another company reporting on Thursday, which is basically Apple, or one of the top companies in the world. So Apple will make its appearance on the earnings calendar after that Thursday's close. It has been the worst Dow Jones stock so far this year. It's down 10.85% through January 23. Weighing on the shares are concerns that the company is losing market share in China and that its AI offerings are lagging. But Wedbush analyst Daniel Ives thinks this panic and bear frenzy is overblown. So our recent Apple iPhone China checks are mixed to softer but overall unit declines in the region. We see as manageable along with stronger US rest of the world growth that should enable Cupertino to hit street numbers for the December quarter, Ives says. He adds that the company's services segment, which is the linchpin to the 4.5 trillion sum of the parts valuation we see over the next 12 to 18 months, should be strong. Ives expects Apple to report fiscal first quarter earnings of $2.43 per share, up 11% year over year, from a revenue of $124.8 billion, which is expected to be higher by 4.3% year over year. So this compares to the street estimates of $2.35 per share from our $24.1 billion in sales. So those are going to be the two major highlights in terms of earnings in the markets this week. And of course, we have seen the economic calendar, we have seen the earnings calendar. What else could go wrong in the markets, or what could go right? Of course, it's important we talk about the main thing that is currently affecting the markets this morning, and that is DeepSeek. So DeepSeek is a new AI large language model that was developed by a Chinese guy, and then he later released that about a week ago on the internet. He made the LLM open source, meaning that anyone can access this AI for free. It works offline, and it has the capacity to perform better than OpenAI's ChatGPT. So the guys who developed it, they literally spent about what? Was it $5 million? So when you compare that with the latest model of ChatGPT, which required over $100 million investment, then it means that their cost is 1/20th of what OpenAI is spending, and yet they have a better product. So the product has been so amazing that today, as we speak, the top grossing app on our app stores is the DeepSeek AI program. So if you check everywhere in the market, everyone is just talking about DeepSeek. So DeepSeek shakes up stocks as traders fear for US tech leadership. So Chinese and artificial intelligence startup DeepSeek rocked global technology stocks on Monday, raising questions over America's technological dominance. So buzz grew over the weekend about DeepSeek's latest AI model being cost-effective while running on less advanced chips, casting doubt on the validity of the sky-high valuations for companies like NVIDIA Corporation. NVIDIA has led the global AI stock boom as its chips have been seen as essential to the technology. So anyone who has been developing AI, including OpenAI, Meta, XAI, or Grok, they have all been focusing on having the best chips in the market. That is mainly from NVIDIA. But then DeepSeek doesn't require the best chips from NVIDIA. It can work on even cheaper chips, and it's performing way better than OpenAI's ChatGPT. So in that case, it's creating doubt on whether investors really need to go for the best chips from NVIDIA, and that is already driving NVIDIA shares down as of this morning. So if you look at the NVIDIA futures, they're trading lower. Of course, we'll be expecting to see a gap down as the market opens later this afternoon. So DeepSeek shows that it is possible to develop powerful AI models that cost less, said Vaisan Ling, Managing Director at Union Bancaire Privée. It can potentially derail the investment case for the entire AI supply chain, which is driven by high spending from a small handful of hyperscalers. So Nasdaq 100 futures tumbled nearly 2.5%, while contracts on the SP 500 fell 1.4%. The moves represent continued losses from Friday's cash session as US shares cooled after gains earlier in the week as President Donald Trump took office. So clearly, for some companies that were really focused on building AI models where they would instead charge rent for people who are using the AI model, that business model is facing a huge challenge because DeepSeek is now open source and anyone can download it and use it on their platform, meaning that you don't have to be charged to use a large language model AI. And that basically means that for companies such as OpenAI, their valuations have really gone down after just that one release from a Chinese company. So the AI model from DeepSeek, founded by quant fund chief Liang Wenfeng, is widely seen as competitive with OpenAI and Meta Platforms' latest offerings. Lauded by investor Mark Andreessen, this is the guy who runs A16Z. One of the most amazing and impressive breakthroughs, DeepSeek's app shows its work and reasoning as it addresses a user's written query or prompt. Released last week, the product is now the top of Apple Incorporated's App Store rankings, with users praising its transparency. Chinese air-rated stocks reacted positively, with mainland-listed Merit Interactive Company among those surging by their daily limits. Merit is among those with the clearest links to DeepSeek after stating in earlier filing that it had incorporated the homegrown AI firm's model into marketing. So in Hong Kong, Hang Seng Tech Index climbed as much as 2% ahead of the Lunar New Year holidays this week. So AI trades slumped elsewhere as investors rethought assumptions on computing power and energy. NVIDIA shares were more than 5% lower on the alternative trading system Blue Ocean as of 1:20 p.m., in Hong Kong, according to Kok Hong Wong, head of institutional equities sales trading at Maybank Securities. So NVIDIA supplier Advantest Corporation slid as much as 8.6% in Tokyo. Data center investor Maple Tree Industrial Trust fell 3.6% in Singapore. Markets were closed for holidays in Taiwan as well as South Korea. So the DeepSeek product is deeply problematic for the thesis that the significant capital expenditure and operating expenses that Silicon Valley has incurred is the most appropriate way to approach the AI trend, said Negunan, head of consumer and internet at Singapore-based Alavia Capital. It calls into question the massive resources that have been dedicated to AI. So the decline in Nasdaq futures comes at the start of a big week for earnings from major tech companies including Apple, Microsoft, and Meta. Profit growth is expected to have slowed while valuations remained inflated, once again causing concern over the large AI-driven rally in the sector. So the Nasdaq 100 is trading at 27 times the estimated forward earnings compared to its 3-year average of 24 times, while NVIDIA is at 33 times, though that's slightly down from its 3-year average. So the DeepSeek release raises new doubts, challenging the notion that China's AI technology is years behind US counterparts. Washington's trade restrictions had kept the most cutting-edge chips out of China's hands, but DeepSeek's model was built using open-source technology that is easy to access. So while current traders like NVIDIA have a strong foothold, it is a reminder that AI dominance cannot be taken for granted, said Sharu Shanana, Chief Investment Strategist at Saxo Markets. The emergence of China's DeepSeek indicates that competition is intensifying, and although it may not pose a significant threat now, future competitors will evolve faster and challenge the established companies more quickly. Earnings this week will be a huge test. So that's the latest update on what's happening with DeepSeek, and of course, it's causing big turmoil in the markets. So if you are trading this morning, then you have probably noticed the big sell-off happening in the Nasdaq, the SP 500, and the Dow Jones, as well as the Russell 2000. So morning, Hungary Patrick. I can see George in the house. Morning, Avogadro from Uganda. Good morning. I can see Ishmael in the house, Alfred, Paul, Oniza Jack. Thank you guys for joining. So there's already one question here. Hi, what is the impact of Chinese extended holiday period on WTI, bearing in mind that China is the biggest consumer of oil? Also, how will NZD and Audi be affected with China's cross-business ties? So normally, we tend to view the Chinese holiday as good for consumer business in China as well as travel. There's usually a record number of train and air travel bookings. So we tend to view this as a tourism event. So at the same time, manufacturing tends to slow down. So demand for oil tends to go down. And in that case, it drives oil prices lower. So when you combine this with Trump's action, Trump is really expanding oil production in the US. For him, his main policy is drill, baby, drill, which basically means that there will be more supply of oil. And as a result, we expect to see prices remaining subdued. So I still expect oil prices to be bearish for this week. So for New Zealand and Australian dollar, I expect the two currencies to be having a very strong correlation with the Chinese yuan. So if the Chinese yuan is taking some step back, then the two currencies could also be sharing in some form of correlation with the Chinese yuan. So also there's another question here. Is gold likely to hit a new all-time high? We'll be checking that on the analysis. On DeepSeek, mind-blowing. Yes, it's absolutely mind-blowing for everyone in the markets. Nobody expected China to release such an easy-to-use AI that basically takes to the top of the charts within a few days. And the cost of producing such an AI was much lower. And of course, it doesn't require the best chips in the market. Even with a cheap processor, it's able to run at a very high efficiency. So just to give you a highlight of what's happening in the markets right now, this is the Nasdaq 100. Notice how the market opened with a gap downwards. So this was the closing price on Friday. This is the current price. The index is down 3%. And of course, as the market continues to panic, remember the last year's rally was fully driven by AI stocks. Everything we were talking about last year was all about AI. So at least we expect to see an extension of this bearish momentum, perhaps extending further down to around 20,787 as the market reprices and tries to rationalize why these Wall Street firms have been pumping billions of dollars into AI collectively. And now we are seeing that other companies are able to produce similar language models with a much cheaper price. So, of course, we are also seeing the Dow Jones are taking some step back. Of course, it's not majorly tech driven. So, Russell 2000 is also taking some step back. But of course, the SP 500 has a lot of tech companies. So, we expect to see some further downside. Of course, if we happen to break the current support around 59.85, then we should be looking at some further drop to around 59.11. So BTC is taking some step backwards, perhaps due to the correlation we have seen with US equity indices, but then it seems to be finding some good support. So in the last 1 hour, there was some form of rejection of lower prices. So if you look at the price action here, so yes, we started the week with a very strong bearish momentum, but we can already see signs of buyers starting to come back into the market. So levels below 100K. So in this case, 97,758. We're already seeing signs of buyers coming in. So in the next 1 hour, if we see more bullishness, then that could be a signal to go for buy positions. But then it hasn't happened yet. So it's a wait and see kind of a scenario. So the dollar index started the week on a positive note. But then you can already see the summary of last week was a bearish momentum. So the entirety of last week was the dollar index weakening. And of course, today, even after starting on a positive, the current hour is showing that the dollar index is erasing the earlier gains. So with a much weaker dollar index, we could be seeing some of these currencies making an impressive recovery. So with the Euro USD continuing to push higher, in this case, we managed to rally last week. Notice the opening and the closing prices per last week. And this week, we expect to see even more recovery by the euro. So in this case, we are seeing some further upside. Remember, we are expecting a rate cut by the European Central Bank. So we could be seeing the market moving slightly higher, but overall direction is still bearish. So we expect to see the Euro USD pair at least breaking this trend line and moving lower. But for now, on a quiet Monday, we could be seeing the euro gaining some ground against the dollar. But overall expectation for the week is that the euro continues weakening as the ECB goes for rate cuts, while the Fed is expected to hold rates at the current level. So pound USD also had a very positive week last week, and now we are seeing some further momentum upside. So this could be the case for the day, but overall we expect the pound to be losing to the dollar as the Fed considers holding rates at the current level. So AUD USD just bouncing from this lower side. So we are seeing a very common theme here of the market finding support along this area here. So potentially bouncing from here on a quiet Monday, but then the overall expectation is that the dollar strengthens at some point in the week. So not the best trades to be looking for buys in this case, considering that the Fed might hold rates. So USD yen, you can see the dollar losing some ground to the yen. Remember, the Bank of Japan decided to cut rates, to hike rates, last week on Friday. So after the rate hike, you can see the price action. Of course, there was a lot of noise. Then today there seems to be more clarity, which implies that the USD yen could potentially break this support as the yen regains some ground backed by the rate hike by the Bank of Japan. So in this case, some further downside momentum. Of course, the support is at 154.975, and we could be seeing some further downside momentum, perhaps even breaking that support and moving lower. So The Nikkei 225 index remains in this range. Remember, it has been several weeks, and by several, I'm talking about more than 20 weeks where the market has been in this range. So we saw the market getting towards the upper side, and now it's jumping right back into the range. So some further downside momentum is expected later this week. So gold still maintaining some positive momentum. Last week we talked about this, that anytime you have this kind of pullbacks, they are representative opportunities to buy, as long as the longer term expectation is that we continue seeing bullish momentum. So in this case, after the pullback from Friday and Monday this morning, we are seeing a strong bounce here, and this could potentially extend for the rest of the day, as we had a bearish early session and now the market is changing direction. So gold could as well be very bullish for the rest of the day. So oil is making an impressive rally here this morning, but as we mentioned, the overall expectation is that oil prices remain bearish for the better part of the Trump era. So in this case, as we continue seeing oil bouncing strongly, the idea is to be patient and wait and look for an opportunity to go short. So we'll be observing this area here with the idea that the market gets to this area and fails to break and potentially continues in the bearish momentum. So the idea is to be looking for signs of bearish entry around this area. That's around $78 per barrel. So outside of that, we have the dollar trading against the Swiss franc, still quite weak. Such a big drop here. So we could be seeing some further momentum downside, especially considering that the market is retesting a major support area that was not broken last week. So if we happen to break below this, then some further momentum downside. New Zealand USD also attempting to make an impressive bounce here. So notice that this was the key level support. So clearly the market is attempting to bounce from here. But the idea is to be looking for a short selling trade once things are turned around and the dollar gains its strength. Then we have USD CAD, also the same thing, market that has been trading in a range and is now bouncing from the lower side towards the upper side. So while the market is struggling right now, the overall direction for the rest of the week is expected to be quite bullish. So dollar trading against the Chinese yuan, there was a question about this. You can already see as the Chinese head into the New Year festivities, the dollar is gaining against the yuan, and this could be the trend for the rest of the week. So I believe I've answered the question on USDN. I've checked on gold. So there's a good question here. Link on Q1 market outlook is not working. I don't know why that would be, but I've tested the link on IG. So if you visit the FX Pesa handle on Instagram, and then you click the link on bio, you will find the Q1 market outlook. It's out now, and the link is working. This I can confirm because I've used it before. So a good question, what do you think of Euro JPY with the divergent interest policies on the two parties? This is a very interesting question. Of course, we expect the euro to continue weakening to the yen. So EJ, sorry. Of course, this is an easy trade to identify. The yen just experienced a rate hike, and this week we're expecting a rate cut from the ECB. So of course, overall expectation is some further bearish momentum. So in this case, further bearish momentum means that we could be seeing some further downside here, perhaps even going to the previous swing. So as per last week, you can see the market was just bouncing from this area here. So perhaps all the way drop to around 159.707 could be playing out for this week. So thank you for requesting that one. It's a very interesting idea, a divergence between two central banks. where one is cutting rates and the other one is hiking rates. So we already covered Euro USD, BTC. So silver, we haven't covered yet. So this is silver. It has been on a slight bullish channel, not very strong trend, but then easy to identify. And now the current price of silver seems to be testing a major support area, also a swing low area that was tested several times last week and the previous week. So in this case, we are seeing a very nice bounce here. So if this is confirmed, then the idea would be to target the previous highs, perhaps the market bouncing from this area and heading all the way back to $30.93. So a very important area to observe to see if this plays out. So just observe the bounce from this area. So good question. Any fundamentals that is making gold to continue higher and higher? Of course, there is quite a number of fundamentals. One of them is central bank demand. The People's Bank of China, the Central Bank of India, they have all been pushing higher. So we expect these central banks to continue with gold demand and lead to a further extension of the rally. So also an update, the link for the FX Pesa Q1 market outlook has just been updated right now. So it should be working. Just check it out again. So as for gold, there is a central bank demand, and also there's this other side where Trump wants interest rates in the US to go down. Of course, that would force the yield on bonds to also go down, making gold quite attractive. So long term, for the rest of the year, we expect gold to be pretty strong compared to other commodities. So outside of that, just checking the comment section to see if there is anything I might have missed. So is gold likely to hit a new all-time high? Gold is very close to a new all-time high. So it's more likely than not to form a new all-time high. So 2790 is not that far off. If you look at the highest price that we saw here as of Friday was 2787. Sorry, this was 2786. So the all-time high is just close by. It's 2790. So like $4 to a new all-time high. So it's almost magnetic, and we are seeing a very strong bounce this morning. And this basically implies that we are headed higher for the rest of the day. So perhaps getting to 2786 and pushing higher to a new all-time high, and that could likely play out today. So for the rest of the week, pay close attention to DeepSeek, the central banks we have talked about, the Bank of Canada, the European Central Bank, as well as the Federal Reserve Bank of the US. Those will be key drivers of volatility this week. But then DeepSeek is basically the key market driver as of today. And any comments from US President Donald Trump might also have an impact on the markets. So those are the things to watch out for. And of course, enjoy a fruitful trading week. So thank you very much, everyone. Thank you for your time. Remember to check out the Q1 market outlook on our social media handles. If you're just beginning trading, make sure to register for an account using the links in the description below. And if you're just learning how to trade, check out the Novice to Pro course available on FX Pesa YouTube, and that should take you to the next level. For our podcast listeners, make sure to check out the latest episode on the Bullish Banter podcast, available on all podcast platforms, including FX Pesa YouTube. So thank you very much, guys. Thank you for your time. I hope to see you on the next one.